Hi, everyone, and welcome to the Wall Street Blockchain Alliance Crypto Roundup for May 2nd, 2025. I'm Josh Klayman. I'm here with my amazing co-hosts, Ron Quaranta and David Brill, and we're very excited to be here. Before we begin, of course, we have our usual disclaimers. All caveats apply. The first is that nothing we say is intended to be legal advice and is not legal advice, investment advice, tax advice, accounting advice, any kind of advice. But it is our thoughts, and we hope you find it interesting. Also, anything that we say, these are our views. They're not necessarily the views of our employer, of the Wall Street Blockchain Alliance, of any clients, etc. So with that, welcome, Ron. Welcome, David. How have you been this week?
Hey, Josh. I'm well. I'm busy. I think we all need a bit of caffeine, a bit more caffeine in our lives. David, how about you?
Yep, a lot of flying, but I'm glad to be back here in New York this week and looking forward to our podcast.
That's great. So what's on the top of your mind for today?
I'll dive in, David, because I've got to do it. And Josh knows this, and for everyone in the audience, please send your comments over. But Josh, I wake up every morning afraid of the next series of economic data that pops up. And this morning, David, we're going macro, I guess. It was non-farm payrolls. 177,000 people got jobs, and they only thought it was going to be 138. And a whole bunch of people in the market said, holy cow, that's great, we think, maybe. And the markets went up. But crypto's kind of been treading a little bit today, except for Bitcoin. David, did you see that? By the way, for everyone in the audience, David gets text messages from me 7 days a week. Did you see this? ... And that's been most of my days, Josh.
No, look, this has been a really fascinating week. There's been a lot of interesting news that's come out. Everybody thinks that the sky is falling, but the data says we have good payrolls. We're hiring people, and they're not government jobs. We're losing government jobs, and we're hiring people. Oil is under $60. There's no more egg crisis. Obviously we have some tariff issues to work through, but there's a lot of positives that are going on.
Steak prices didn't come down by the time we had dinner, though. I do want to point that out, David. All kidding aside.
Wait, do I hear a bet brewing
Nope.
on the prices?
Nope.
We did go easy on you, Ron. We didn't go for the Wagyu on you. We just went, old school filet on you. We didn't do the 30-day aged Wagyu.
It was a great time, and I would get you both Wagyu beef anytime you wanted. I think one of the things, David and Josh, if I could, I'm consistently surprised, and I don't want this to be a political conversation, David and Josh, we never do, how the media talks about what's happening with the economic data versus what's actually happening with the economic data. And I'm not necessarily taking a position other than, all right, the economy seems resilient, 177,000 jobs. And you'd see on any major news outlet, 3 economists in a row who'll tell you, well, the catastrophe's coming, tariffs are bad, and the economy is going to, fall off of a cliff. And I'm not saying they're wrong, just how much of that becomes self-fulfilling when people hear how the news is interpreted and how all of the data is always revised. David, we talk about this year after year, and it doesn't change with them.
Yeah, and I think the biggest problem is twofold. Is you have revisions to employment data every month, and then you have revisions to the core numbers every month. And I was really thinking about what's going on, and there's a Fed meeting next week, and there's very little chance that we'll see a rate cut. But it feels like we're going to be in another scenario where things are going to move, and the Fed's going to be behind the curve because they're going to rely on data. That data is going to get revised, and they're not going to be able to be proactive, but they're going to be reactive again. And so I think what does they say about insanity? It's the same thing happening over and over again. And I think we're going to have a little bit of economic, insanity when it comes to the rates and sort of the same patterns we've seen over the last few years.
Well, what do you guys think? I mean, do you think we're going to see the same types of revisions that we saw before, like with that magnitude? Or do you think that may have had something to do with the run up to the election?
So it's a really good question, Josh, because some of my perspective is that a lot of the changes we're seeing, and David, tell me if you disagree, are I'm using the words front running, not in the classic this is bad sense, front running what the tariffs might do. David, you and I have talked about this. It's buy inventory now because we're not going to be able to get inventory to put our phones together. Hire people now because we're not going to be able to have the production to do it later, whatever it may be. I think a lot of this is preparatory, but it's astounding to me how resilient the economy's been given arguably chaos since January. I'll add one last thing to that, Josh, if I could. It is, in my mind, minus some of the big outliers, crypto kind of holding its own in the chaos. And it makes me wonder, there were really great articles posted about the macro picture, Josh, and crypto, particularly Bitcoin, has arrived as an asset class. And I think we're seeing that play out in real time.
Yeah, I'm gonna go a little bit away from the chaos and sort of say that, President Trump said that, they're going to revisit tariffs as part of his election platform. Mm-hmm. And I will just say this: I think ultimately we will probably get to a good place. I think the communication and the sort of back and forth hasn't been helpful and has created some instability. But I do still think in the end we're going to get to a good place. It's just going to take a while, and the instability isn't helpful. But I'm really looking at crypto, like you said, Ron. We're hovering around 97, 98. This is a big area. There's a lot of shorts here. There's a lot of liquidity here. I really think if we can get through this area, we can move right towards 100 and potentially go through 100. Although we may not get through the first time, but this is where we are right now is a big moment for Bitcoin and for crypto, because I really could see us, pushing through maybe even to all-time highs this month if we can get through this next band here.
Josh, if I could, and I think there's one word I want to add to that. David, you shared the news early with me. I think it was the other day. Wirehouses.
Yeah.
There's something to be said for the arrival of an asset class like Bitcoin when E-Trade can carry it, for example. And I think that's got legs. And it makes me want to ask you, David, the question that we always have, which is, so what about the alts?
Looking at the charts and looking at the way things are looking, generally, the alts are setting up really well for a rally. But my question will be, are people going to just go to Bitcoin first, which I expect them to? And is it going to be sort of a runoff when they're taking profits, or will it come simultaneously? And I still think that even though there's some really great projects, I think that for non-crypto natives, besides Bitcoin and Ether and maybe Solana, there's a lot of good projects that are just not in their narrative, and you can't do anything with them, at least here in the US. And I still think that is a problem we have to work through.
David, I agree with you, but I want to throw one more wrinkle to that. And Josh, I'm sorry, I'm hogging time.
Hogging it all.
The E-Trade crowd, David, will go to call them the brand names, right? They'll go to Bitcoin, they'll go to Ethereum, maybe they'll go to Solana. I don't think the E-Trade crowd or any of the wirehouse customers are going to run to the other platforms to get some of the alts. I just don't think so. I'm with you on the rally of alts. I think that's further down the road. I think right now we're looking at a consolidation of the marquee brands in crypto being able to be accessed in ways they never could before, and I think that's a game changer.
I agree. I do think, though, that, and it's always the funny tokens. Like, there are tokens that I think are great, that I think are really undervalued, but I really start seeing some frothiness with the memes again. And I'm not going to pick certain ones out, but, there are certain ones that I follow, and they have moved significantly. One or two of them have moved over 100%. Now, they've sold off a lot, so let's be clear about that. But I really think with the alts, it comes down to people like memes. I think they know there's not a lot of utility there, but they like it and it's fun and it's a little bit of a lottery. Um, but with the other tokens, I do think that the technical setups are good. It's just where will the liquidity come from?
But the other tokens, David, you mean the use cases that you buy into
Yeah,
from an analytic perspective. And I'm thinking gaming, I'm thinking Web3, I'm thinking AI, for example. Just to be clear, that's what you're talking about, not the here's crappy coin, it might go up 1,000% and then go to zero.
no, I think AI agents, logistics, some of these use cases, gaming, these are being used, these projects are being used. I think they're great narratives for our space, but I will say, like, people like meme coins and they're going up, and we should indulge that. I mean, I will even mention altcoin, which has done extremely well. Like, if you laugh, everybody laughs when you hear that. It's
Wait,
just,
did you just say fart coin or art?
yes,
He
I do.
did. Oh,
Okay.
he did. We're going there, Josh.
But if you look at a chart, it's no laughing matter. So, um, but I really think we need some narrative that people who are not in the wirehouses, who can just go on E-Trade or Schwab or wherever they like to go,
Yeah.
will think of a token and think of a use case and be like, that's really interesting, I want to buy it. And I just think in the US, we still have some work to do to get there.
And David, I mean, you know what, you and I go back well enough I'm not saying speculation's wrong. Just if you're going to speculate, know you're speculating.
Yeah, and I think if you buy a meme coin, you're speculating.
Right.
But listen, look, if people, I have nothing against them. If people want to own them, I think that's great. You just caveat into it.
You have nothing against them. You just said that one of yours went up 100%.
Yeah, but I mean,
I'm just teasing.
but I mean, they're like pictures of cats and dogs, and there's a boys club. I mean, look,
I'm just teasing.
look again. I think everything in this ecosystem is interesting, and everybody has a flavor that they like. So.
Totally hear you. And I'll say, like, whatever we may see happening in the price action and things like that, I would say there are indicators in other ways that things are really happening too. I mean, to the extent that those in the audience can see that I'm a little worse for the wear today, as Ron and David know, it's because I basically pulled an all-nighter writing something relevant to a client. And not that that's news, but I would just say when we're thinking about top 10 banks globally, right, making real moves behind the scenes to begin considering different types of transactions that could be secured by directly or indirectly interest in crypto and a variety of other types of activities. This type of momentum and this type of dedication I have not seen in this way since before the fall of FTX. And I will say, like, literally things are being dusted off and updated, right? And there's time pressure. So I think that, yes, we see what's going on in the market. And as Ron and you and David have said, Bitcoin and other things are having their moment. Certain other things are having their moment. But really, I mean, the moment is also happening just at the very most traditional and significant levels and places. So I think that I don't know, to me is exciting too.
Look,
Josh, can I go ahead, David? I'm sorry.
I was going to say, we're seeing that also. Look, in the M&A space, you saw that, and of course, there's obligatory. I'm in New York, so you have to hear a fire engine.
And you didn't mention Chair Gensler, and we're still hearing we're hearing sirens.
It's amazing. I mean, and I live in anyway. So what's really interesting is that you've seen some M&A, like we're seeing it as a business and clients looking at opportunities, and like we're doing due diligence for clients on potential opportunities. but you've seen some publicly, and you saw today. So it's been announced that Ripple made an offer for Circle of 5 million, and then supposedly, and I'd want to see something.
Billion, right?
5 billion, yes.
Yeah.
And then supposedly the offer's been raised to 20 billion that I saw next today. But I would like to see that, verified. But you're seeing that, and obviously we're seeing things that are not public that are being discussed. And Josh, you're probably seeing some of those too. So I think there's an overall bullishness both in the tokens, both in institutions, and on the policy side, we're really seeing a move forward to get stablecoin legislation. So there's a real bullishness around the sector. I think even some VC investing is picking up again too.
David, sorry, go ahead, Josh.
I was going to say, just following on stablecoins for a moment. I mean, just today, there was the announcement that Tether intends reportedly to enter the US market with a stablecoin, as well as that we saw just in the past few days, or yesterday, whenever it was, that a stablecoin launched by World Liberty Financial will be used by an Abu Dhabi investment firm for its $2 billion reported investment into Binance. Mm-hmm. So I think that, we're seeing a lot about stable coins and a lot about big deals.
Yeah.
Josh, David, just to weigh in on the stablecoin thing, we talk about stablecoins a lot. I'm trying to figure out what's the end game for stablecoins, meaning we can't have 5,000 different stablecoins, right? And when you look at the biggest players, I think I saw in the news this morning or yesterday, you're right, Josh, it's all a blur now. Tether holds more treasuries of the United States government than Germany does, for example. Like, they're holding a lot of U.S. instruments. How does that shake out?
You know what, I have a very interesting view, but I want to hear Josh's view first.
No, I want to hear your interesting view.
I mean, I think that a lot of institutions are going to have their own stable coins, like a lot of the different financial institutions. And I think that, those stable coins may be like kind of in a walled garden kind of situation where among some big banks are going to have stable coins that have interoperability with their maybe 4 or 5 other, like, not like a Venmo at Zelle. It could be like Zelle. And they have, like certain banks can use their stable coins within that ecosystem. But I don't think, and the reason why that's important is because that will also lead to more liquidity going into other products, and maybe will lead it to going into buying on crypto exchanges or maybe into DeFi. But I think every bank is probably assessing, do they want their own stablecoin, or if not, do they want to be in a group, in a consortium of having a stablecoin amongst that group?
I mean, so I agree with your view, David. I would also say, I don't think people realize, or not everyone, some people do realize, you guys do realize, and many in our space do realize, or who have a traditional financial background, right, may understand this. But a lot of times people, I think at a lay person level, say things like, oh, well, people are putting in $1, they're getting a stable coin at $1, and saying where's the magic in that? But I don't think they realize quite the amount of yield that is returned on the reserves, right, that the stablecoin issuer makes. Because sometimes people are like, well, how do people make money on that? Well, there's a lot. And so right now with the draft legislation, or with the legislation that we've been seeing working its way through Congress, there isn't really the ability to have that yield passed on to customers. And even when we look at what the SEC has said about clarifying which stablecoins, in its view, don't involve securities, there was a limit, at least in some of the language, about yield-bearing stablecoins, which harkens back, of course, to the Do-Kwon Terraform Labs decision as well in the Southern District. But at some point in the future, I think many in the space I've heard at least talk about how great it would be to be able to have the people who are putting in their dollars in order to get the stablecoin be able to have some portion of those returns. So I think, future business models may look very different. Of course, we want to be cautious and learn the lessons from 2022, right? That we've seen with respect to certain platforms, but hopefully, those challenges didn't really have anything to do with crypto, and they had to do with terms and conditions and fraud. But yeah, I think it's a great question about how many we will have or whether there will be consolidation. Clearly, like with the Ripple offer for Circle, clearly they're trying to gain a bigger piece of the pie. But I will say, like right now, even in a very recent, like last day or so, Uber ride, my Uber driver was talking about the differences between RLUSD and USDC and USDT. And I was like, wait a minute, what's going on here? But yeah, one last thing I'll just say about stablecoins, because I just think it's timely and interesting, is you may have seen that the UK has it's been reported that the stablecoin rules will apply only to the UK stablecoin rules will apply only to UK issuers, right? And it's been reported, whether this is true or not, that this is to try either to harmonize with the US or to try and appease in the US.
Josh, just real quickly, a couple of things. I'm with you. It is astounding how much money the stablecoin issuers make. But to David, your point, it sort of makes sense that the banks would have their own. When you look at stablecoin and being able to give yield to clients and have them earn yield, that's squarely in the banking regs of what's happening stateside. So to your point, Josh, it makes sense that the banks would want to participate in some of that. And I think I saw this morning, I think Genius Act out of the Senate has revisions. I haven't seen the revisions yet. David or Josh, I'm not sure if you or anyone in the audience has had an opportunity to review, but they're looking at a vote by Memorial Day.
I lost the last part of that, Ron. You froze on me for a minute.
Oh, I'm sorry. Apparently, Genius Act is moving through the Senate. They're looking at a floor vote before Memorial Day.
Wow. I will say this. When I think about stable coins, and I think about the yield with stable coins, I would just really like to see a way that customers could get that yield. Like right now, if you hold USDC on Coinbase, you can.
Did we lose David, Josh, or did you lose me?
I don't hear him. I heard the last piece that said if you go on that trading platform, but it looks like he may be frozen.
Yeah.
And I'm waiting with bated breath to hear the rest of the sentence.
Oh, we lost David. I'm sure he'll be back from the yachts. I guess his Starlink's not working. Josh, I mean, it's a good point, though. We talk about how do we give back to the investors, the purchasers of things. I think we have David back. Hey, buddy.
I think the powers that be don't like the fact that I want consumers to get yield on their stable coins.
How dare you?
I was just saying that I like the fact that if I hold USDC on Coinbase, that I can get 4 and something % on the stable coins. And I think the yield can be really competitive to like our fractional banking system, and that people would rather hold stable coins that are backed by treasuries or US dollars and get a meaningful yield versus having money in a savings or checking account and getting next to nothing.
David, it's this. I'm sorry, Josh. Go ahead.
I was just going to say, do you think any of this, like of this reticence or hesitation around permitting that may be sort of a visceral kind of feeling, maybe not directly related, because obviously it's something different, but just thinking back to what happened to folks with Celsius and Earn?
I think we lost David.
Obviously, it's a different topic, a different type of concept, but I wonder whether there's like a Celsius Earn overhang that makes people think, oh, we have to be careful about this kind of stuff.
So I hear you, Josh, but I mean, we're starting to see more lending opportunities in crypto now. So Coinbase has a lending product that's available to everyone except people in New York. I know I've seen a couple of others, and I wish I could recall their names, but I think Cantor Fitzgerald talked about doing, Bitcoin
Absolutely.
lending, and there are a couple other parties that I know have talked about it that just the names escape me. So I think it's more fundamental than the few hiccups that we had in the prior years. Because look, if you have audited stable coins that are backed by dollars, unless you have that sort of Silvergate bank run situation that happened that made USDC depeg because people were concerned that maybe the billions of dollars they had in Silvergate were at risk. There should be safety in the system that people can feel confident about.
So
But
oh, sorry, go ahead.
no. Go ahead. Go ahead.
I was just going to say, I agree with you. And I'm not in any way suggesting that any of those lending programs bear even more than a word similarity in some instances to Celsius. I'm just wondering, like, when we think about the kinds of in legislation, this hesitation to permit that, whether that is like somehow in the minds of certain legislators or something like that.
Look, it certainly could be. I just think that that train is going to leave the station, and it's going to be people want it. People want credit in crypto. Sometimes too much credit and sometimes too much leverage, but people want it, and people will get it. It just depends on what form it looks like. And you're right; it needs to be done in a thoughtful, meaningful way. And I think the way to do that is really, institutions that have they're dollar backed, thoughtful about the LTV levels and collateral. And that would tie in nicely with all the things you've been doing with the UCC and how you perfect that collateral.
David, I agree with you, and I just want to add one more thing to that. And Josh, I think it kind of plays into the what you're describing. There's this narrative. We've seen this narrative before, right? It's the same mindset from regulators and legislators, David, that did not allow for staking to be a part of ETH ETFs, for example, the giving back to investors. And I think a lot of what we're seeing, David, correct me if you or Josh disagree, Real is fundamentally reinventing how banking and investment work. Look at yield-bearing stablecoins as a possibility, David. That goes right after standard banking franchise of give us your money and you'll get 0.5% APR. This is a very different dynamic, and they don't give up those kind of franchises easily.
Yeah, I agree. And look, crypto and the nature of the frictionless way you can transact has pushed the stock market and pushed the traditional finance in a number of ways. Look, we're down to T+1. It used to be T+3.
Yeah.
Some of the brokerages are talking about 24/7 trading. Even tokenization. It's a thought process that this system works, and we want to find ways that we can make the system work. But fundamentally, consumers, again, like big banks have a lot of great purposes, but consumers, when it comes to deposits, are getting the short end of the stick.
Yep.
Sure.
Shout out to Greg Murphy, Josh, if we could, he sent a question to us. In your opinions, how much, if any, of the stablecoins that are put in lending programs are converted back into dollars for use that creates the yield paid? I don't know. It's a really good question.
Yeah, I think that is a really good question. But I think for the yield paid right now, I mean, look, treasuries, I think you're getting 4.5%. So I think it's really passing on the interest that people are getting on treasuries to the customers. I think what I'm saying ultimately is if we get a bill that doesn't have yield-bearing stablecoins, I think that there will be companies that will come up with ways to offer rewards for holding their stablecoins. And that will be some of the interest that they're receiving from holding, whether it's treasuries, repos, or whatever cash and cash equivalents they're holding.
David, that brings us right to the next question. I don't know who paired LinkedIn user is, but David, the Fed doesn't want that.
Yeah, maybe you should read his comment, Ron.
Yeah.
But, an onshore compliant stablecoin with yields would be a shortcut to narrow banking, fully reserved banking. The Fed does not want that because it would be too popular and deprive banks of a cheap source of funding. They have denied Fed master accounts to narrow banks that have applied. That is very, very true. David, I'm going to bring up your point, and you make it elegantly often, which is this is what people want. There's going to be a point in time where how can you deny people without disenfranchising them and sending them to different markets, potentially more risky markets. I'm not necessarily saying they should or shouldn't, but it's a really good point, LinkedIn user, and we are grateful for it. Whoever you are, please say hello. And for anyone else who's got additional comments for Josh or David or I, please put them.
I mean, I think what it is crypto and this ecosystem is chipping away at the traditional way we do business.
Yeah.
And the sort of the rapidity of which we do business.
Yeah.
I mean, think about it. If you think about, like, for instance, work, and like when you're an employee, why are you paid twice a month or every 2 weeks? Theoretically, you should just be paid. You work a week, you should be paid like on the Friday or the Monday after that week you've worked. And look, now there's some banking solutions that sort of allow you to access some of your salary ahead of time. But if you really think about it, why is it that people are paid twice a month or every 2 weeks? And why are they paid every? What?
Are you going to use the word float?
Yeah. I mean, that's what's going on.
Yeah.
So I think this ecosystem that we're a part of is upending some of the traditional ways banking is done. And stablecoins is another one of those ways.
And I don't think we should minimize the magnitude of that, Josh, David, if I could. Like when you bring up, I remember T+3, and I remember certificates in a physical box in a basement in some brokerage firms. And, exchanges have been operating that way for decades. The banking system that the three of us and everyone in the audience knows has been operating that way for 900 years, give or take. So the upending of some of those models because of technology is not going to happen overnight, and there'll be a lot of bumps in the road, I think. But it's a good place to get to.
Look, I'll tell you one other thing. I was a general counsel of a transfer agent for a number of years. I would get panic calls about removing, restrictions on stock certificates or restrictive legends on stock certificates because people wanted liquidity after the time they had it. And they would rush around and do it, whether it be an M&A transaction or just that it was done under a 144A exception. And, now you can do a smart contract that would, allow somebody to trade that after the time that goes by under whatever exemption they're relying on. So, you're really seeing the evolution of all these things before our eyes.
Yeah, shout out. It was George Clayton. Thanks for coming to the show, George, WSBA member. Josh, I'm sorry. Go ahead.
Oh, no. I was just, I was going to say something. It's not exactly on point. But what I was going to say was when you guys were talking about, vestiges of the past, something came to mind. And although it's not necessarily just the past, it still continues, but it made me think about tokenization and things like that and dematerialization from paper. But I was thinking about after, Hurricane Sandy, when there was all the flooding in Lower Manhattan.
Yes.
And where all those notes and certificated securities held in storage were flooded literally and underwater. It just made me, it came to mind. So I was about to say it. I was like, I'm not entirely sure that that's not still happening. So, but in the future.
But look, let's be honest, on the flip side, even in our space, I think you can imagine people with the fires in California. Some people's ledgers might have burned up, and if they weren't a safe even, they may have just, burned up because of the fire. So I think it's all evolving, in our industries, and we all have pain points within our industries. And I just think that stable coins will help deal with some of the pain points we have in our industry. And hopefully there'll be a way that consumers can benefit with that as well.
So if we're talking about innovation, Josh, I'm definitely going to rip up the script because I've got to ask you and David this. David, does that mean you will be staring into the orb of WorldCoin as they come to the United States, get the token, and be part of that new world order?
That's going to be a little bit of a wait and see, I would say. But look, I appreciate that they're innovating and bringing something new to market. And somebody would say, look, you look into a camera every time you fly now.
Mm-hmm.
Is it any different if you want to transact? I don't know. I'm still on the fence about that, Ron. What about you?
I still have I have the same deep privacy concerns that prevent me from using Clear, which is starting to whittle away because I wait on TSA pre-lines that are as long as the regular lines. And why the heck did I pay for this? So it is an interesting point, David. I'm in the wait and see camp as well.
And Josh doesn't have to worry about Clear.
Josh got the private jet. She doesn't
He
care.
just flies from Teterboro, so he doesn't have to worry about Clear.
But actually, you know, my thoughts, they're not actually internally consistent. So like Ron, I avoid getting Clear. I don't use my face for my phone. I don't use my fingerprint for my phone. And I get weirded out if I have, even with my building at work, like we had some facial recognition stuff that we could opt out of or use. I didn't do it. But then people remind me, including my family. They're like, why are you waiting in this long flight line when your face is literally all over the internet? Like we are talking, like someone can find us. It's not like we're.
It's
But I
crazy.
think I have this weird thought. I know this would never happen, okay? Because why would it happen? But I always have this thought of like, what if something happens and I need to like escape? And like
Where are you
somehow
going with this, Josh?
it's never actually happening. No, but it's just like part of me, like I know I don't have anonymity in any true sense because of the internet. But still, this idea that like if I turn over my actual stuff, it's the same reason I never did 23andMe or anything like that.
Yes. Well, now that the company's bankrupt and that all of that data is for sale is another scary issue.
I think when it comes to flying, if the government wants to know where you're flying, they're going to know, whether it be through subpoenaing Clear or their own records. So I'm not as circumspect about using that, and I don't like lines, so I'm happy to skip through the line.
It's not about the government for me, though, David. And I know we are totally digressing on the theme of the show. It really is about the cybersecurity aspects of it, because I have a problem with government systems, from a cybersecurity perspective. I will share one really creepy story, and anyone in the audience, if you got a better story than this, let me know. As you both know, I had to be in Washington this week, so I got the early Amtrak train. And the night before, I set my alarm for 4 a.m., which is even early even for me. And I will share with both of you the image, but I got a pop-up from a Wall Street Journal article that says, setting your alarm at 4 a.m., you're not the only one, right after I set an alarm for 4 a.m.
Yes.
And it was a legit article, and that creeped the bejesus out of me.
I think it's interesting that when I have text conversations with people, including you guys,
and
even though I turned Siri off, and I think I've turned off the things that I can, that I still get articles pop up about things that we talk about. So I think that's interesting.
Siri's always listening, David.
I would like to understand. Now, this is really a digression, and we can pop back after this, but I don't necessarily get advertisements for anything that we talk about. I do, however, see an endless stream of Facebook Reels or other Reels when I go on social media of body shapers. Okay, like these things, like where like, and the people look lovely. It seems to be working for them, but I really don't get it. Like it's like one thing, like, and this has built-in shapewear.
I haven't thought about that, Josh, but I'll
oh God,
spare the audience. I do think, all kidding aside, that somehow the purchases you make get sort of wrapped into. No, I know you haven't, but I think somehow they get wrapped into. The experience.
We've finally done it. We've finally so torn up the script. I have no idea where we are anymore.
I will tell you something funny. I flew to Tallahassee on Tuesday with my daughter, and I managed on Delta to get on an earlier flight, and both screening machines were not working.
Oh,
I have never in all of my flying seen that it came to a complete halt. There was just this long line and everybody was waiting because they couldn't screen the bags. And I just never, and all the time I've flown, like I've seen one out, I've seen one for like 1,000 people. I'm exaggerating a little bit, but literally both were out. And my daughter and I were sure we were going to miss our flight. I was like, time to have some, dinner in the airport.
Did you make the flight, or were you late?
We did, only because there were some Delta flight attendants in line right behind us, so they needed to be on that flight, so they held the flight. But literally, we were just cooling our heels waiting for the scanners to start working.
Oh, Lord. Should we get back on topic for the
Sure.
crypto round?
Yes. I did want to mention,
Audience.
I just saw on Bloomberg while I was just sort of, that eToro might be looking to go IPO as early as next week. So
Everyone wants to go IPO.
well, it looks like we're going to have the year of either IPO or, I was very happy. My friend Andrew Siegel posted that Galaxy Digital will now be
Yes.
uplisted onto NASDAQ on Wednesday. And I know the Galaxy team has been extraordinarily patient. Those are my words. Waiting for this moment, but congrats to them. And I think we'll see a number of crypto companies, be public this year.
Yep. And the SPACs are coming back too, David and Josh, as we've seen. So I wonder
Better or for worse.
For better or worse. Exactly. Like it makes me wonder about who are the participants who are going to get involved in the markets and crypto via SPAC, and that kind of ended ugly in the first round of that.
I think this time, because some of these SPACs are going to be vehicles to hold Bitcoin, that there's going to be more intrinsic value in these SPACs than maybe in the companies that did SPACs previously.
But they're not operating. They're not going to be operating companies then, right? They're not going to have a business. The business is buy Bitcoin, issue more, buy more Bitcoin. Like it's the strategy.
I mean, that is a business.
Yeah, no, fair. The business is to buy Bitcoin. That's it. There's no business plan. There's no business model other than that.
Well, I think it's to buy Bitcoin cheaply and leveraging, the debt markets and convertibles and build up a stack.
It works.
What I'm saying is, yes, it's a one-dimensional company, but I think they have more intrinsic value than maybe some of the other companies that were trying to do SPACs.
How do you value a SPAC that only buys Bitcoin, David?
There's one that just came out that I think it's called Cantor Equity Partners.
Yeah.
The ticker symbol is CEP, and I think it's a combination of Cantor, Tether, and SoftBank.
Yep.
And so I'm very curious to see how that stock performs in terms of this strategy, not as saying to buy it or not, but just in terms of, is that strategy of buying Bitcoin and like holding it in a wrapper, a stock wrapper, so to speak, will that be successful?
The economics of it are fascinating. Go ahead, Josh. I'm sorry.
Just wondering, like, will it correlate with MicroStrategy then? Right? Or is MicroStrategy so?
I mean, the issue is
that it has different.
Right. I mean, the issue is that these different companies have different financing levels and tiers where they can borrow money or they can issue shares, or they have different structures and profiles, David, than Strategy, for example.
Well, I also wonder, once all the wirehouses go online and you can just buy an ETF, will they be able to differentiate themselves enough that you want to own one of those companies versus owning an ETF?
I don't know about you, Josh, but I would invest in the Brill Bitcoin SPAC if that were ever to come out for this century.
Well, if I ever throw my name behind a product, I promise you I'll be 200% behind it myself. So.
Yeah.
But I think that's a really meaningful question. Once we get to the point where every wirehouse allows you to buy a Bitcoin ETF, is Strategy now less attractive, or are other vehicles less attractive, or do they need to outperform? Like, do they basically need to buy Bitcoin in a way that they give you a better return than the ETF does? And can they do that?
Right. And so I just want to go back to the wirehouses, Josh and David, if I could. Schwab announced probably later this year. E-Trade announced probably later this year. What are the others, David, that I probably should have top of mind that I don't remember, that are the remainder that we've been talking about for so many years of wirehouses that need to be part of it?
Well, I mean, I still think you have
Merrill,
which, I think...
You don't see that happening?
Well, it doesn't seem that way. But not that I have inside information, but that doesn't seem that way. I think you still have UBS, you still have Merrill. I mean, Goldman's involved in crypto, but they haven't necessarily said when and if they would have like a retail trading function.
Yeah.
Or maybe they might have an institutional trading function. I think this is where the next real pool of liquidity is, unleashing all the wealth managers and things like that into being able to allocate that to their customers. Because the other reason why this is so important, sorry, Josh, the other reason why it's so important is that if Bitcoin and crypto are in these sort of diversified funds, people aren't going to rush to sell Bitcoin or crypto if it has some gyrations or some volatility. Because they're not going to sell their fund because 2% of that fund has more volatility than maybe other parts of it. So I think it makes crypto and Bitcoin stickier within people's portfolios.
Right. We're getting price quotes. That's the audience. They send us the quotes now. Basically, the investors are buying BTC through SPAC at 531K.
Wow.
Interesting stuff.
Yeah.
Josh, I wanted to go back to you with one question because you've been an amazing host and moderator, but I wanted to ask about the legal stuff because I think it feels like the regulatory stuff's gotten really quiet. Am I wrong?
I mean, I think it has in large part. We still are seeing some moves for movement away from enforcement. For example, PayPal announced that the SEC's investigation into it had ceased, right?
Yep.
Into the stablecoin rather, had ceased. We saw that the SEC delayed 5 crypto ETFs for certain altcoins. And they said they could delay others, but so far it's 5. I think in terms of other regulators, last week, I don't think we mentioned this last week though, although I don't know if I actually joined you guys last week. Yeah, sorry. So you may have said this, but the CFTC issued a request for public comment about perpetual derivatives, right?
Yep.
So that has a potential crypto angle, and we may see upticks in different types of applications relating to those things. Did you guys talk about that last week?
David and I talked about it. I don't know if we talked about it on the broadcast, David, but we talked about it offline. I actually have a 1 o'clock call specifically about that topic, Josh. So I will keep you both.
Ron wants to keep his right to trade 100x leverage. He does not want to take it away from
Listen, first of all, David, please don't even joke about 100x leverage. Everyone in the audience, he's totally joking. I'm happy with 50 to 75x. I can live comfortably with that.
I do think there's a lot going on, Josh, like on the state and local level.
Oh, yeah.
Excuse me. Yeah. Both on the litigation side, I am aware of a couple of lawsuits that have been brought on the litigation side on the state level. And then, it looks like more states, for whatever reason, want to have their own version of the bit license. And, I think we've talked at length about what my views are on that, but it looks like those are gaining steam in other jurisdictions as well.
The states are a really interesting point, Josh. I'm sorry. Just, shout out to Michelle Gitlitz and Joseph Colo and David Pope on our legal working group, WSBA members. There's a lot of activity, stablecoin bills across a bunch of different states. And you're both right.
I was thinking the bit license type thing in Illinois.
Right. Like it's important that, the industry keep an eye on that and understand that as well. And how does that conflict at all with federal regulation that might come out of what we're seeing in DC? It's interesting times, and Bitcoin's holding its own.
Yeah, and I think also at the state level, there's a lot of competition with respect to banking licenses at the state level versus movement at the OCC, right? And which path folks may end up taking. And we also saw just very recently I believe it's a putative class action against an apparel brand. I don't know if I can say the name in respect of some NFTs, alleging that there was a sale of securities. So it's kind of like, as much as we try and get out of this mindset, plaintiff's lawyers can keep calling
lawyers are still busy.
Well, I mean, look, I think unfortunately or unfortunately, I think people are using the argument that these assets are securities as a way of trying to get insurance for buying something that didn't work out as well as they had hoped it does. And so unfortunately, that's just going to be part of our ecosystem for a period of time. But, I think that over time, as we get clarity, and if we do get sort of a market structure bill and classifications in that market structure bill, ideally, some of those cases may go away because they'll be preempted by the legislation, at least going forward, prospectively. But I think there's a lot of wood to chop on that bill still.
Another topic, just generally, like I'm excited about all the potential IPOs, right? Excited about M&A, things like that. I do think that the tariffs, though, we should be continuing to watch because the cost of financing and other sorts of things, whether it's for leverage on one thing or acquisition financing or another thing, that could be affected greatly by uncertainty in the market and not actually knowing. And I think if we think about what was released, was it earlier this week, that post by the Chinese government about did you guys see this? It was an extended sort of video.
I missed it.
It was referring to or it was trying, I suppose, to get other countries to band together to stand against the U.S. and calling the U.S. a bully. And I think it described at one point the U.S. as, if everyone stands against the U.S., it's only a lonely boat. Or something. A very dramatic visual of on a dry, crackly. At least that's the way my mind is remembering it. So I just think, yes, very excited about all this stuff, but we should just, even as the numbers come out, we should just think about, a lack of certainty is not good in any respect.
I'm with you on that, Josh. We should keep an eye on that, but the markets tell us what they're thinking. And I'm with you that those numbers are important. But David, the VIX at 23 this morning, 2 weeks ago was at 55. The short dated yield approaching 3%. I think that the 10 years approaching 4.1. So we're starting to see, I'm with you, Josh, that's very, very important. But the market, is speaking to us in other ways that I think are critical to the longer term picture of what we're talking about. As far as tariffs, David, I heard the CEO, I'm probably misquoting this, of Rolls-Royce noting that they could manage the tariffs. I assume you breathed a sigh of relief when you heard that for your next Rolls purchase.
As long as the convertibles aren't affected.
I'm sorry, Josh.
I will say I just saw something on X of interest is that I saw a post that the EU's going to ban anonymous crypto accounts and privacy coins in 2027. So really? I think that might be something we follow up on next week. So
now I got to write that down.
Because I think also interesting is Tether said that I don't think that they're going to do business in Europe because they feel like MiCA compliance is too heavy for USDT in Europe. Now I've read that sort of secondhand, and I want to dive into that more. But I think maybe a Europe focus for next week is something.
Yeah, we should get some of our European colleagues on, and I think Tether will also be listed from a lot of exchanges in Europe because of the MiCA issues. But we have members and friends and colleagues in Europe. We should definitely pull them into the dialogue for one of our upcoming. I would continue talking to you two for hours, but I've got a CFTC perpetual futures call in 6.5 minutes. Josh, David, shout out to all of our friends and Greg Murphy and colleagues in Toronto. I think the three of us will probably be in Toronto for a consensus. So we are sorting, speaking of flights and waiting in lines and airports and hotels, Josh. Josh, David, how do you want to leave off? What are you doing this week?
I want to know how long Josh has to sit in customs as I stroll through with my global entry. That's going to be.
That's cruel, David, because I'm probably waiting on that same line.
I'm breaking the what's it called? You can't get through the scanner.
Stop the orb. Oh goodness.
I am curious about these posts that we saw, and I'm certainly going to read up on that. I am curious that they have legislation in Europe. I believe it is moving the industry forward, but maybe it's something we dive into. Is it? Is it helping or is it hindering?
So for anyone out there, if you're European based or you do business in Europe and you want to talk to us about it, drop us a note, info@wsba.co. Josh, What about your weekend coming up as you recover from multiple all-nighters and jet stream trips, Gulfstream trips?
So I don't really have anything planned this weekend, but next week I'll be going to the University of Chicago Law School for, crypto get together with other certain other lawyers in the space, which always proves interesting and fruitful. And then later I will be going to decentralized Lugano. So speaking
Wow.
that. So yeah, so that's my next week. I do want to say just one thing before I ask you what you're doing, Ron, is what you mentioned about the VIX and everything else, which I need to be better educated on. I will just say I defer to you guys on these matters of macro because other than like a loan course in high school and possibly a loan course in college during the last millennium, um, everything I know about macroeconomics, I've learned from the two of you. So
Well,
yeah.
thank you, Josh. It's always a great conversation. And for those of you who don't know David, well, his background, equity analyst, right? Back in the ancient days, David. So this is why I kind of throw in the how are you valuing that, David? Because I'm expecting to hear NPV formulas. And I'm expecting to hear, discounted cash flow models. But David, I hope you don't mind me teasing you about that.
No, not at all. Unfortunately, a lot of our projects don't have cash flow, so it's hard to discount. But we're getting there. We're really getting there. But
I'm going to throw.
Go ahead.
Go ahead. I'm sorry, David. Go ahead.
No, I had a bit of trial by fire when I first was an equity analyst, equity associate, like modeling big public companies. That was a lot different than what you see in a textbook and more dynamic. So we've all had our growing pains, but it was a fortunate time in my life to get that experience.
Yeah. Josh, I am going to answer your previous question about what I'm doing this weekend, and this is the nerdiest thing I could possibly come up with. I'm going to be doing math. And the math I'm going to be doing
I thought you just said meth.
I'm going to be doing math. MATH, which now means I need a new mic so Josh hears me better. Mathematics. David, Josh, I was reading this morning that I cannot believe you said that. I was reading this morning. No, it's okay. The Buffett index or data, and David, you will appreciate this from your old days. The Wilshire 5000 divided by the cash value of the Wilshire 5000 divided by the cash value of annualized US GDP is Warren Buffett's favorite metric about whether or not markets are underpriced or overpriced. And this is the lowest, cheapest it's been for at least 3 or 4 years, David, which is a long-winded way of saying his math seems to indicate the markets are going to run up. I'm going to actually do the math to check that, Josh, because I am proudly a nerd and it's not meth, it's math. That's my weekend and my wife's going to hate me for it.
Well, please text us.
Oh, I'll be texting you both. What's that, David?
You're really going to use Grok for an hour and you're going to come up with an answer.
Oh, I'm definitely using Grok and GPT. Anyway, everyone, we got to leave it there. Josh, David, as always, what a privilege chatting with you both. For everyone who joined us in the audience, thank you so much for joining. If you've got additional questions for us, info@wsba.co. I'll tell you whether or not I'm going to use the orb. David, Josh, we'll be back next week. Have a great weekend, everyone. Take care.
Take care.
Bye.
Take care.